This is your market recap for May 28th, 2025. Today we had a very undecisive day. It was kind of just seek and destroy. We took out highs, then lows, then highs again. So if we go down to the hourly time frame, we can start to see what happened. So the way that helps me think about this day in particular is, where did we open, right? So this right here, actually no, sorry. This right here is the opening price of the day, all right? So what do? Made this tiny wick up top, 4.5 handles. Then we came all the way down here and took out this low. Then we rallied above these highs here, right? Took out these highs with these relative equal highs over here in target. So we sweep it, close above it, consolidate for 2 hours, and then market opens, right? What's the point of us taking this high? Right? If our purpose was to take this high and then take these lows through here, there's no reason for us to come up here and close. We closed, accumulated, market opened, we rallied up to our target, these relative equal highs. Then we immediately retrace off of that down to here. Now this is a 15-minute fair value gap, which we'll get down to when we get to that time frame. We then rally off this, lunch happens, so not much happens during lunch, kind of just meander upwards. Algorithm kicks back in at 1:30. Fill this 1 hour fair value gap, and then we hit it again during the last hour of trading, and then send us down, resuming the move that happened in AM session. So if we go down to the 15-minute time frame, we can kind of see all that better. Again, sweep, expansion, sweep, close, accumulation. All right, there's relative equal lows here. We missed them right here, right, the 915 low. We missed them here, so that means what? If we're looking for draws on liquidity, and it failed to get this one, with us knowing we took out this high and are continuing upwards, and these relative equal highs are over here, what are we going to go for? Boom. Relative equal highs up there, swept. Immediately, what do we get? We get like 6 handles above it. Then we come all the way down, retrace immediately down to this 15-minute fair value gap. Now, what makes me feel bearish about this is that this is equilibrium, right? We did barely sweep this, so a deep retrace is to be expected. However, deep retrace to me would be maybe price comes down here, right? The bottom of this fair value gap right here. Not all the way down here. So this shows a very strong bearish intent with this, such a deep move. We then react off this 15-minute. Lunch happens, kind of meander our way upwards. Lots of wicks here, don't want to take any of this. We then resume trading, spike up, fill this 1 hour fair value gap. Perfectly touch equilibrium, right? If we grade this whole thing, equilibrium is right there. Look at the closure of this candle, if you can. Perfect. If you look, this candle right here, look at the closure of it. Perfectly under equilibrium. Inside this 1 hour fair value gap, we then kind of meander for a little bit, right? Because that's FOMC. FOMC spoke at 2. So we're sitting on our hands until then. So we get nothing. 2:30. Last hour of trading, this macro starts us move down, right? I believe it started at roughly 40. We reacted off equilibrium, came down, up 1 minute, I believe, inverse, expand lower. All right, last hour of trading, what are we seeking? Well, as of here, as of now, this is all made jagged, right? There's no relative equal highs here. There's relative equal lows here, and then there's this one down here as well. So we'll come down and get those. Then what? We still have a whole hour of trading left. What do we do then? Come up, seek these highs, right? We took out sell side. There's none left except all the way down here. We're not reaching for that. So then we come all the way back up and take out this high. And from there, you might say, all right, sell side's taken, buy side's taken. What do? We resume AM sessions move. You see here, we swept this, bearish, right? Lunch, retraced that, took out this high, 1 hour, whatever, took out low, took out high. So now we took out lows, took out highs, we resume AM sessions move, playing bearish all the way down to here. We reacted nicely off this 1 hour fair value gap over here. And then market closes here. Now on the 5 minute, I'm not going to go over it again, but that's kind of, you can just see it all in more detail. It's a fast move here for a little bit. You can just even see how, even on the 5 minute, it barely swept. And, forgot to mention this, it is an SMT, right? ES is nowhere near this high. Nowhere near it. So, got the expansion lower, taking out these lows. That's one. Again, deep retrace, 15 minute, lunch, moving against all this liquidity we created with our sell side move in AM session. Algorithm kicks back in. Macro here, FOMC speaks, come up, perfect equilibrium. Look at this closure again, this green candle, perfectly under equilibrium, perfectly. And then we displace, come back up to it, last hour of trading, macro starts. So boom, this takes us all the way down to these lows, right? Take out this low, take out this low. Then we retrace up, take out this high, and what do we do after done? Sell side, buy side, done, resume AM session, right there. Nice little 5 minute help, and then we close after retracing off this 1 hour. Now in the 1 minute, there's a whole lot of SMTs, right? Kind of guides us. There's this big high time frame one, which I don't really count on because it's too high time frame for you to be able to pick it specifically saying we're going to reverse now. But sweep it barely. Look, even on the 1 minute, there's no desire to go higher. Then come down, take out this low, retrace, 1 minute right here, macro, perfectly, the high. But then go all the way down, kind of messy here, don't want to be in this. Get an SMT of these lows. That forces lunch to push up, taking out these liquidity here. We then get an SMT here as algorithm kicks back in, which pushes us upwards. We get an SMT of these highs, perfectly at equilibrium of this AM session move. We then validate this 1 minute fair value gap right here. Expand lower. Retrace up. Right, because at this point, FOMC happened here. Right, so we're letting it do its thing. We see it displace, come below here, sweep it. We're retracing 1 minute inverse, perfect reactions off concentric encroachment. Displace, boom, macro starts. We take all the way down here below these relative equal lows and this low here. We then get done with that, super quickly reverse, come to take out this high. Take out this high and reverse once again to resume AM session's move of playing bearish right there. Now this all happens within the macros, right? This macro out here creates this low and this high. And then the 315 to 345 macro gives us this entire bearish move here. So looking into the future, well, why can we expect a day like this? All right, a small day, take high, take lows. Look at this huge day. 530 handle day, right? We have that, but then we also have to look at what we do during the day, right? We have this right here, we opened. Then we made a small move downwards and then expanded very slowly. The small move here created, we swept this liquidity and obviously quickly reversed off of that. So we can tell that this is not a very expansive day, just based off of that. Now, looking into the future, we have Thursday and Friday left of this 4-day week. I think this is definitely a retrace, right? If we go down to the hourly time frame, we have this whole bullish move to retrace. We look to be already playing bullish off of it, right? This 1 hour fair value gap reacted very, very quickly for that. Yeah, we'll just have to see what we do. Definitely have to see what we do tonight. I mean, the markets have been giving me trouble. I'm definitely in a slump right now. Not really understanding what the markets are doing, but I'm trying. And if I can trade in conditions like this, man, yeah, can trade whenever I want. So, yeah, this has been your market recap for May 28th, 2025.